And welcome back to Finance Speaks in our quarterly update for the third quarter of 2019. For those who are not familiar with me, I'm Kyle Sadler, president of Precept Wealth Management and best-selling author of I'm Retired, Now What? So currently, the buzz that is posting headlines for the markets is of the trade tariffs. You see, President Trump's good gesture to postpone the scheduled October 1st trade increase by a couple of weeks was met by favorable steps from China. You see, the market consensus seems to be extrapolating positive vibes and is converging on the possibility of a mini deal in which the tariffs currently threaten for October 15th and December 15th will get withdrawn. So please allow me to step out and make some bold predictions. You see, if we look at Mr. Trump's previous social media behavior over the years, he seems to always come up with a nickname to taunt an adversary. However, with all the talks going on with China, the one thing Mr. Trump hasn't done is give President Xi Jinping a nickname. Why? It's because I think, first off, Trump understands Chinese culture and knows that the Chinese want to save face. By calling that president a name, he knows that no deal will be made with him. Also, second, Trump needs this deal to go through for re-election purposes. So with that said, an additional 2 points must occur for President Trump to get reelected. Negotiate a trade deal that is beneficial for the United States, and one other one that I'll discuss shortly. However, as I step out again and say a trade deal or a mini deal will not happen until mid-2020 as the election is heating up. He will need that momentum to post primaries, and such a deal would dominate the media headlines. Okay, so now let's transition to the U.S. stock market. If the clouds of uncertainty are indeed removed by the year end, the global economy should reaccelerate. You see, U.S. equities will likely rally in this period of fundamental strength, but lag their international peers, which trade at a higher valuation. This isn't a bad thing. No, it's an acceleration, and which is always positive for those that are in the markets. Yes, the trade talk will affect the markets, causing some volatility. But a failure of the trade talks and further escalation of tariffs could easily tip the U.S. and global economy into recession. But again, my belief is that we should see an 11th hour deal before either side loses money for their investors. So some important leading indicators are already signaling this occurrence eventually. So my eyes are still remaining focused on the ongoing markets, but the fact that I consider is that since my last quarterly update, the markets and the economy have not progressively gotten worse, it's gotten better. Now, here's the second part of my statement earlier regarding President Trump's re-election bid. My firm belief is that in order for Mr. Trump to be reelected, the S&P 500 must remain above the 3,000 point mark going into November of 2020 election for him to even be considered in a victory for the presidency. So in the meantime, expect the normal chatter, tweeting, name calling, except for President Xi Jinping, rumors and reports of corruption, and normal politics. So, as we conclude, here's my outlook on the fourth quarter. The business cycle. Slightly negative, not that the economy is bad, but as I stated previously, the U.S. market appears to continue to lag the global markets. We expect 2020 election politics in the U.S. to make an eventual trade deal and a more likely scenario. So I just don't see the United States domestic stocks being number one in the category, but they will be positive. Valuation is expensive. we had a great run in the U.S. equity market valuation, significantly higher, but we don't need a recession or a correction. We just need time to allow the valuation of leveling of domestic and foreign markets. We just have to keep the perspective that the risk premium estimates for the S&P 500 index are still below historical norms. So what's the sentiment? I don't think that the momentum indicators are anything to write home about at the beginning of the fourth quarter, but I still believe that the S&P 500 will achieve over a 20% annual return for 2019. So the boldness to watch. Here's something that I've seen to be interesting. Analysts talk about the financial stocks are at max valuation and are overvalued, but they've forgotten about the small and mid-sized banks. In August, we saw this big jump in gains with those guys. The average mortgage rate is 0.75% over the current mortgage lending rates. Could there be a realization that money can be saved over the next year or so by refinancing your house? Will we see the refinance boom occur during the remainder of this year and extend into 2020? If this refinance boom occurs, will the market surge upward as it has in prior refinance booms? So here's my conclusion. Hang in there. The captain has yet to call. All hands on deck. And I know I sound like a broken record, but I'll keep monitoring the markets and the economy for you, letting you know when it's time to head to the life raft, because this is how finance speaks. I'm Kyle Sadler, headed out until next time. Be blessed and know that we are here for you. A special thank you to Russell Investments, Morningstar, the Wall Street Journal, and Horizon Investments for assisting us with the information and research materials needed to make this program possible. Thank you.